Mutual funds and ETFs are popular investment options. They let you invest in a variety of assets, including stocks and bonds. This makes them great for diversification. But how do you choose between the two? This essay breaks down the differences between mutual funds and ETFs. It helps you decide which investment strategy is right for you. A mutual fund pools money from many investors. This money is used to buy a basket of assets. A professional fund manager manages the fund. They choose the assets in the fund and try to achieve the fund's investment objectives. For example, a fund might focus on growth stocks, while another fund might focus on bonds. Mutual funds are priced once a day. This is called the net asset value, or NAV. You buy shares of the mutual fund at the NAV, which is calculated after the market closes. Mutual funds are good for beginners. They offer diversification and professional management, and they are easy to buy and sell. ETFs are similar to mutual funds in many ways. They also hold a basket of assets. Like mutual funds, ETFs offer instant diversification. However, ETFs trade on stock exchanges like individual stocks. This means their prices fluctuate throughout the day. ETFs often track a specific market index. An index is a group of similar stocks. For example, the S&P 500 is an index of 500 large US companies. An ETF that tracks the S&P 500 will hold all the stocks in that index. ETFs are known for their low costs. They are also very flexible, allowing you to buy and sell them throughout the trading day. Section 4. Key differences, costs, access, and flexibility. One key difference between mutual funds and ETFs is cost. Mutual funds typically have higher fees. These fees are called expense ratios. These fees cover the costs of managing the fund. ETFs usually have lower expense ratios. This makes them a more cost-effective option. Another difference is trading flexibility. Mutual funds can only be bought or sold at the end of the trading day. ETFs can be traded throughout the day. This gives investors more control over their investments. Finally, ETFs may offer more accessibility for some investors. Some mutual funds have minimum investment requirements. These can be high. ETFs typically have lower minimums. Some brokers even allow you to buy fractional shares of ETFs. This makes them accessible to a wider range of investors. Section 5. Weighing the pros and cons mutual funds. Mutual funds have several advantages. These include diversification, professional management, and convenience. They offer a simple way to invest in a variety of assets. You don't need to pick individual stocks. However, mutual funds also have some drawbacks. The biggest drawback is their higher costs. Those fees can eat into your returns. Another drawback is their limited trading flexibility. You can't buy or sell mutual funds during the trading day. This can be a disadvantage if you need to act quickly. Overall, mutual funds can be a good option for beginning investors. They are also good for hands-off investors. Just be aware of the fees and limited trading flexibility. Section 6. Weighing the pros and cons ETFs. ETFs have become increasingly popular. This is because of their low costs and trading flexibility. They are a cost-effective way to track a particular market index. They are also very transparent. You know exactly what assets the ETF holds. However, ETFs also have some potential downsides. Because ETFs trade like stocks, you pay a commission each time you buy or sell. If you trade frequently, these commissions can add up. Also, while diversification is an advantage, it can be a disadvantage if the market sector you're invested in declines. Overall, ETFs are a good option for cost-conscious investors. They're also good for investors who want more control over their investments. Section 7. Finding the right fit for your investment goals. So, which is better, mutual funds or ETFs? The answer depends on your individual needs and investment goals. If you are a beginner investor, a mutual fund might be a good option. It offers diversification and professional management. If you are a cost-conscious investor, an ETF might be a better choice. Consider your investment goals. Do you want to invest in a specific market sector? There's probably an ETF for that. Are you looking for a hands-off investment? A target date mutual fund might be a good fit. The most important thing is to do your research. Understand the differences between mutual funds and ETFs. Choose the investment that aligns with your financial goals and risk tolerance.